Good afternoon. I'm Ted Larson, Realtor with Bjorkland Realty, serving the great state of Minnesota. Recently I made a couple of videos highlighting the difference between a 4 and a 5% interest rate. And the reason I did that is I read an article by the National Association of Realtors stating that the Fed is planning on pushing interest rates up to 5% by mid-year. So that means June-ish, they're anticipating that interest rates will be at 5% instead of 4%. So I wanted to illustrate the difference in payment between buying now and buying in June. I also made a video regarding buying and selling in winter as opposed to buying and selling in the spring and summer markets. I know it's not a lot of fun, especially in climates like ours, to get out and look at homes. The advantage is that the people that are out looking for homes, if you have a home to sell, those people are more serious about buying. So tend to be less negotiation, less hassle in the sale, and you know that you're dealing with somebody who really wants to and probably needs to buy a home. These are advantages if you're selling. Okay, so first of all, the interest rates. This is my very highly technologically advanced system here. So just for the sake of comparison, we took a $200,000 loan with all other variables being exactly the same. Taxes at about $2,400 a year, and insurance costs of about $2,000 a year, which is fairly realistic. So $200,000 at 4%, if you bought that home in January right now and locked in at 4%, you're looking at $1,321.50 a month. And that's if the mortgage is for $200,000. If you take a mortgage at 5% in June buying the same house, your payment goes up $120, $119 to $1,440.51. That's a big difference, $120 a month. There are a lot of ways you can use that. It's half a car payment, well, quarter of a car payment, maybe a little less. Covers a cell phone. Anyway, you can see the difference. Now here, this is our very technologically advanced winter market chart. If your home is valued at $200,000 in a healthy spring market, you can usually anticipate that you're going to lose about 3 to 5% selling in winter. Despite the motivation of the potential buyers out there, there's just not as much demand. Okay, so your winter value, we just calculated everything at a 5% difference. If you lose 5%, you lose $10,000 on the value of your home. If you are a first-time home buyer, this is a huge advantage. If you have something to sell and you're moving up, as in what you're buying is more expensive than what you're selling, I'm going to show you the advantage. If the only people that this does not apply to are people who are selling a home that is valued at more than the home that they'll be purchasing. Okay? And this may not apply to all markets, but it definitely applies to Minnesota and a lot of other cold markets I know as well. So if you lose 5%, you lose $10,000 on the sale of your $200,000 home. If you are buying a $400,000 home, they're losing 5% on their value, so you are gaining 5%. So you'd be able to buy a $400,000 home in theory for $380,000, which is a gain of $20,000 for a net gain of $10,000 in home value. The other possibility is instead of spending $380,000 on a $400,000 home, you could bump it up. You could buy a $420,000 home for $399,000 for a gain of $21,000, which means your net gain is $11,000. Very simple math, folks. If you have any questions, don't hesitate to call, text, email. All my information should be listed below. 612-401-4914. I am Ted Larson, and I'll be back with you again soon.